Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time on Friday morning, the Friday that is known as Good Friday, which is sort of strange given what actually is being celebrated, but none that are memorialized or whatever the appropriate language is. And to those who are doing so, we wish them all a happy Good Friday. I always remember as a kid, I grew up many of my young years in Jerusalem, and this weekend we used to go to all of the actual places where this theatrical drama took place, and so that was always kind of fun. That's where that happened, and that's where that happened. Oh, really? It actually happened. That's good. So that was interesting. Anyway, that means the Friday markets are closed, actually. And we're being a bit pagan here by actually working and moving on with other things. And so it gives us the opportunity, I think, to reflect a little bit about what the hell has happened over the last 2 weeks. Oil markets closed yesterday at 67.96 on Brent, up a whopping plus 3%, and big jumps from the sort of trauma of last week when we had OPEC and the tariff announcements, and then a little bit of recovery this week. Let's start off with Neil Atkinson, former head of oil markets division at the International Energy Agency. With that in mind, Neil, a little bit of reflection. How do you see the last 2 weeks? Are we closer to reality today with this sort of high 60s price, or are we having a dead cat bounce and the reality was last week when we nearly went through 60 on Brent? Your thoughts in reflection of the last 2 weeks?
Oh, well, you're clearly not an animal lover. What is reality? Really, what is reality, Sean? Is it in oil price terms 65, 70, 75? I have absolutely no idea. And earlier this week, the IEA and the OPEC Secretariat put out their latest monthly oil market assessments. And my sympathy goes out to them, because how on earth do you try to assess the potential impact on oil demand in 2025 from the tariff announcements from Trump and the reactions by other countries? How on earth do you actually model that, given the fact that from one day to the other you've no idea what's going to happen? So there is no reality, and we are in a situation now where we are living through the imposition of these tariffs, what they will actually mean in the real world, in various markets, not just energy, of course, and therefore what will be the impact on economic activity and demand, oil demand. Meanwhile, on the supply side, our friends at OPEC, never short of a surprise every now and again, have either brilliantly decided they're going to sweat over producers and possibly sweat the US shale sector, or they've made an enormous blunder which could end up damaging them, as I believe it did after the end of 2014 when they tried a similar tactic. So the answer to your question is, I can't answer it because I don't know what reality is.
I don't know what reality is. I would buy you the T-shirt, and it'll be in the post to Paris. Let's go to Niamh McBurney, Associate Director of Control Risks, based here in the UAE. Niamh, your thoughts on a similar thing, the sort of reflection of the last 2 weeks since the sort of OPEC Plus announcement to the markets closing yesterday, the traumas of that. And in the middle of it all, we had a resurgence of Iran to the front of the headlines.
It really has been an extraordinary 2 weeks, and to boot, we've had a huge amount of consulting deadlines. So I have been, and the team have been incredibly busy trying to keep up with everything, as well as meet those consulting deadlines. So yeah, I mean, I agree with Neil, and actually, I was thinking about this just a little while ago, and it reminds me of not just 2014, but early 2020, when I mean, in a different tactic, when there was the short-lived price war between Saudi and Russia, because that ended up morphing into the COVID-19 pandemic, and the implications for oil markets of that. And I get a similar feeling for what we're in now, which is is it brilliant or is it a blunder? Because we're going into a time of huge uncertainty. And did they forget that this was coming? Did they not take it into account? Have they factored it in? And it's a masterful stroke of strategic genius. We'll have to wait and see.
Which part? Sorry, who's the genius here? Can you just
of
unpack
OPEC of introducing the increased production. Well, we just got to wait and see. And amid that, an incredible
So introducing it in a sense of genius, meaning that they buried the news under the noise of Trump, and so it didn't get the full whack that it might have otherwise got?
Oh, I'm thinking more genius in the sense of in a couple of 3 or 4 months' time, the way the oil markets shake out, that it might actually be beneficial for OPEC. It kind of, with a sort of 4 to 6 month timeline.
Okay.
But again, I don't know what's happening, inside the halls of Vienna and what the discussions are. But it certainly seems an interesting choice of policy given where we are. And it does make me wonder if there will have to be another adjustment, maybe a change, a slight shift in policy over the next 3 or 4 months, as Neil said, depending on how, the tariffs shake out. And then, we have everything that's been happening in the region in the last 2 weeks. We had the intensification of IDF activity in Gaza, increasing, disruption and issues domestically for Benjamin Netanyahu. We have Iran is back on the table. I mean, honestly, this time 2 weeks ago or the beginning of last Monday, it really looked like the US was gearing up for using the stick of military activity against Iran. That immediate concern has now receded. For us, we think that a US strike on Iran is a credible alternative at this point in time. We think that the Trump administration
that's a pretty important word you just used. Isn't a credible alternative.
It is our credible alternative. So we think right now the most likely path over the next couple of weeks, and really we're talking weeks, kind of 6 weeks, 2 months, is the Trump administration engaging in talks and trying to use the carrot rather than the stick at this point in time. So that doesn't remove the potential of airstrikes from the table, but it's lower down the list of priorities, we think, for the Trump administration right now. Trump himself has been very, very clear, and I know the podcast has talked about this a lot, of making a deal. And we think both sides really do want to see a deal for very different reasons. Can they get there is a separate question. But right now, over the next couple of weeks, there is progress to be made. But we shouldn't forget that stick loitering in the background of potential US and/or Israeli military activity kind of being used as a sort of distant threat. But for now, we think that is a credible alternative in our list of options of scenarios.
Rad Al-Qadiri, managing partner at 31032 Associates. It looks by the flag that's on the photo that I'm seeing here, Rad, that you are at home in Baghdad today. Is that right?
I'm in Sulaymaniyah in northern Iraq.
Oh, Sulaymaniyah. Okay. Is that called Kurdistan? I'm not sure what that's. No.
Kurdistan region, take your pick.
Take your pick. Republic thereof. Rad, your thoughts and uniquely positioned of being in the US and now being in the region these last 2 weeks. Which part of it is could the real market please stand up? Which end of it do you think is more representative of where we may be going? Is this a pause between the traumas, or is this the reality? Your thoughts of the last 2 weeks?
I think what you have to sort of factor in terms of this is that what you've had in Washington is less than a change of administration and more regime change. And the very nature of decision making has changed. And I start there because that's your biggest wild card. And I think, there will be sort of brief pauses between the sort of wild swings, but the wild swings will be the norm. I mean, you have an imperial presidency that's testing the Constitution, the courts, and convention to see how far it can go. And a US president who runs the United States the same way he ran the Trump administration, very top down, and not necessarily using any of the institutions for the function that they were developed for. you add that to the mix of some of what we're talking about, and it explains some of the unpredictability. It explains the swings, and Iran is as good an example as ever. I agree with Neve completely. But if you look at sort of where Iran policy has swung from over the past 2 weeks, it's very clear that that is representative of the personal instinct of the president as much as it is any considered analysis. And therefore, it can change on the basis of the personal instinct and whims of the president, not any.
Well, let's just dig into that one a little bit, because if it was that he would be the first president probably in the history of America, and that's obviously seems to be on many other fronts. But is he also without accountability to the sort of the strong Zionist forces within Washington that would have their own agenda and has been displaying that agenda for the last 18 months? Is he immune to those influences?
I don't think he's immune to those influences, but I think this is a presidency and a president who's willing to buck convention and test some of those lobbies on a whole host of levels. Not just in terms of the Zionist lobby, but in terms of more generally, any faction in Washington and any faction within the administration that doesn't necessarily agree with the president. I mean, the line is, you agree with the president. Now, I think this would be, an Iran deal would be a very big test of that. I think a wild card would be will the Israelis sit down quietly and let a nuclear deal happen on a basis that they don't agree with? And Netanyahu's body language in the Oval Office spoke volumes about how uncomfortable he was with this. But the comments that he made about a Libya-style dismantling versus President Trump's comments about where he was going to go showed that there was quite a bit of daylight there. But it goes back to this element of unpredictability. I think everybody looks at the United States, and this may account for some of OPEC's thinking as well, and sees it, as I say, simply as a change in administration, sees this as ultimately business as usual. This is the first 2 or 3 months. There's a lot of energy and everything will calm down. And I think right now that is a very risky assumption. And we might actually be in some new world that is very different and has very different implications for how OPEC, how the Iranians, how anyone in the region makes policy.
Neil, it strikes me that this sort of Friday, this Good Friday at the end of this 2-week period, and the week this week, week 2 rather than week 1, if you like, has been an opportunity to get away from the headlines, this sort of exhaustion of the sort of headline fatigue, maybe I would call it this week. And so the ability to ignore the headlines and focus on the fundamentals of this oil market, which is still China buying lots of oil, which is still inventories relatively low, and US drilling rigs shutting up shop. On the fundamental side, it's been able to sort of creep through the headline fatigue and bring some upward momentum to the oil markets. Your thoughts on that?
Well, I mean, you could argue that the oil price or the Brent price that you quoted at the start of this show is surprisingly strong, considering everything that's going on the supply and the demand side. But of course, we've now got heightened tension in the Middle East to factor in. We are in a situation where we've got this potentially double whammy of a big increase in supply potentially against weaker demand. And frankly, we're still in the early stages of understanding where that's going. And, we've got China. Well, will China continue taking supplies? I mean, I'm reading in the FT this morning that China is ceasing or has already ceased buying US LNG. There's still a lot to unravel here, and we are still in the early stages of it. And anybody that I think attempts to forecast what the oil price is going to be, a month from now, 2 months from now, 3 months from now, I think is not a fool.
Well, most of the forecasts that came in, they sort of came in the hot red white heat, if you like, of last week, and all the banks were sort of downgrading into the, forecast with Brent at a 50 something rather than a 60 something. A lot of them shot their guns early, maybe.
Well, maybe they have, but I mean, I remember now back to March 2020 at the IEA when we had, as Neem said, this price war between Saudi Arabia and Russia, and then the pandemic immediately, and we were all thrashing around trying to understand what this enormous event actually meant for the market. And it is very, very difficult to put a handle on it, given the massive uncertainties. And in March 2020, April 2020, we did the best we could. We got it pretty accurately in the end, but it was a momentous event. And the views will change as the numbers change. And we are still in the early stages of understanding what the actual real world impact on trade flows are going to be. The early signs are that it's not good. We're reading about supply chain disruptions to all sorts of industries. You read about toy manufacturers in the United States already saying that they can't import things they need from China. You get other sectors saying that there is disruption already, or there's going to be disruption. The shipping industry, the airline industry, we're reading about tourism to the United States falling dramatically, apparently. So, these are still very early stages, and I'm not condemning or criticizing the investment banks or the OPEC Secretariat or the IEA in any way. We are all trying to understand something which is a moving target.
Niamh, one thing that, is relatively clear is that oil revenues, oil prices are lower on the average this year than last year, and last year than the year before. And however much lower they will be this year, we'll see, but it's generally forecasted to be at least $10 per barrel less than average than last year. My point I'm getting to is, with all of that fiscal squeeze on the Gulf and the Middle East region and all of its respective energy producers, what layer of additional stress does that put in the region, put in the geopolitical fractures in the region?
It's a really important question, and one that we've been looking at for the last couple of weeks. Just taking importers to start off with, Egypt and Jordan and others, from an oil price perspective, this will be very, very beneficial. It'll make inputs cheaper, but they're likely to see knock-ons in their wider economy that we think could lead to isolated bits of civil unrest and things, as you would expect in these countries at a moment of such disruption and kind of global upheaval. When it comes to the exporters and when it comes to the Gulf, there's been quite a lot of analysis over the last couple of weeks about, oh my God, the oil prices effectively collapsed. How are they going to fund spending? And it's an important question, but we must remember that the amount of fiscal reform that has taken place in the region as a result of successive crises over the previous 15 years, the amount of reform that's happened in the last 5 is, and slightly longer than that, really, Saudi Arabia back to 2016, 2017, is absolutely fundamental. Yes, a number of these countries, Saudi Arabia, Oman, the UAE less, still rely on oil for kind of about 60% of government revenue. Sometimes it's higher, sometimes it can be slightly lower than that. But the overall kind of fiscal framework that has been put in place, the decisions about spending, what money is being spent on, how governments are able to pay for that. They're doing it through not just higher revenues or lower revenues and that direct chain of funding. It's also coming from higher taxes across the region, also from higher sovereign debt issuance as well, and the overall attitude to sovereign debt across the region, apart from Bahrain, is very, very healthy. That there has been significant reform. Take Oman as a really, really good example. They're expected to hit under 35%, kind of 34.7, 34.9% of government debt to GDP by the end of this year. They were 45 3 years ago, even higher. They've come down a great deal. The Saudis, it's incrementally increasing. The UAE, it's still pretty comfortable, around 25% like Saudi. So yes, it is a concern, but for me, it's a concern as we look to the 2 or 3 year timeline. If this is a 6-month window of suppressed prices, It's our expectation that a lot of countries in the Gulf will be able to see this through fairly comfortably. Sure, is there another couple of $1 billion added to the debt burden by the end of December? Yes. Is it going to massively push up overall debt to GDP ratios? Probably not. And also given the incredible focus across all of the region on making sure that money is being spent on, really long-term valuable infrastructure projects, things that are going to really add to the economy over the long term. That's a much better place from a fiscal policy side than where we have been for much of the last 30 years. There are going to be strains on the monetary policy side. We shouldn't forget that the currency pegs, these are really, really important. But there will also be benefits if the dollar weakens. We could see, ironically, a surge in exports from the region. Not that it produces that much other than run of gas, but there are windows of opportunity here. So the picture economically is a lot more mixed than people are saying, but for now, I am less negative than a lot of analysts.
Rad, the same question and thought really in the context of America, the US. I mean, the most sort of potential disruptor for the world at the moment is the US. You mentioned that in your earlier comment, that it's not so much a change of government, but as a regime change with all of the major institutions of the US under question, even to the fundamental base of the Constitution. But ultimately, we're not seeing that in the markets. Is the stock market, is Wall Street, is the bond market even now seems to have calmed down after last week's trauma? Given the scale of literally the sort of judicial system in America being under threat, the financial markets are asleep to the threat.
I think the financial markets have gotten the T-shirt "You Promised Neil," and are struggling with what is reality. And in the absence of any clarity, are sort of making it up as they go along. I think the financial markets are struggling as much as anybody else with this.
Well, they seem to be struggling to the upside. I mean, their constant flow is trauma, but flowing back to the upside. I mean, it's obviously still the same issue of the last 10 years. It's an ocean of liquidity that has to find a home every day.
It is, and in that context, it will grasp for straws. And I think the straws that are being grasped for is every time, there is an overcorrection every time Trump does something that sort of appears balmy. But, when he reverses course under pressure sort of very quickly afterwards, or sort of comes out with a statement that appears to contradict previous policies and that, seems to restore sanity and calm, they go for that. So again, they're looking at those moments of calm as opposed to the wild swings that I said, earlier would become the norms. And I think it's not just the financial markets. I mean, I think, corporate America and the corporate world is clutching on to the fact that this is just the first few months, and the President Trump has already made reversals. Like, he came out with a crazy tariff scheme, and within 24 hours sanity had prevailed and sensible voices like Scott Bessent's had prevailed. But that again assumes that we're in the old world, and I think in the absence of it's going to be accumulating. I agree with Niamh. I think, it's almost a parallel sort of for what she was saying about Gulf finances. If we're still in this world in a year's time, if chaos continues to reign in a year's time, and more importantly, to go to your point, if the challenge to institutions and critically the challenge to courts is proven to be structural and fundamental, as opposed to, I think, what most certainly American companies are hoping is that, the Supreme Court will bring logic and will bring calm to this and will bring some adult voice to this. If that doesn't turn out, I think we're in for much choppier waters. And then, the swings that you could see both in the financial markets and the swings I think you're going to see in some of the oil, in the oil markets and energy markets could be much more significant. But the world just hasn't woken up to Donald Trump yet.
I mean, it seems to be quite consistent. I mean, while he's flip-flopped a little bit on tariff this or tariff that, the attack on the judicial system has been pretty consistent and getting more overt and obvious. You'd need to be sort of dead not to see it at this stage. And it doesn't strike me that the financial markets have recognized that a U.S. system without a reliable judicial system, a U.S. financial system without a reliable judicial system, is Botswana. And Botswana is probably more reliable. I keep picking on Botswana because I love the name, but there's probably many other countries that could fall into that place. Let's go to the survey question and see where oil markets soared this week as Trump headline fatigue allowed traders to focus on fundamentals. That's my basic little piece of Good Friday wisdom. Neil Atkinson, looking forward now, 2 weeks in reflection, long holiday weekend in the US, in the West. I think even into Monday is a holiday weekend in much of Europe. Where do you think this emerges? A new dawn, the nightmare of the last few weeks recedes and some normality returns, or Mad King George starts blowing things up again? Your thoughts on the outlook for the weekend, and that basically takes us into May.
Well, I'm due to be in Washington in almost exactly 4 weeks' time, and I'd like to be able to pass through immigration without having my phone checked for anything disobliging.
Well,
But
you
I'm
better start
glad.
using the word beep, beep,
So I'm
beep.
going to be buying my burner phone, of course.
Yes.
Look, I think Rad hit the nail on the head, really. We are in another world, and I think to expect a return to whatever we think normalcy was, I think we're being rather naive. Trump is an old man in a hurry, and despite what he might think, he's probably should only have another 4 years. Midterm elections at the end of 2026. So there's an awful lot still going to happen. And every day when you wake up, you download the newspaper. I use the old word newspaper, showing how old I am. You read of new things, and there's still more to come. And we are in another new world that we have never seen before in our lifetime. And as far as its implications for energy markets, I still think the worst is yet to come. A point quickly here on consumers, because we keep talking about supply and OPEC, and you talked, Sean, at the beginning about shale producers reducing drilling activity and so on and so forth. I was told by a very senior person at the IEA when I was there in my early days, when I was banging on about OPEC cuts or OPEC production or whatever, he said, remember, don't forget the consumer. And for consumers, lower oil prices are a good thing. And to some extent, there will be an offset to disruption to trade and economic activity from the fact that consumers will be paying lower prices at the pump and possibly even lower prices at the pump in months to come. So, it isn't all about producers. It's not all about OPEC plus, important though that is. There is a benefit potentially to consumers.
Neve, there is some tangible things happening in the coming weeks. We've got the IMF World Bank annual spring meetings next week. We've got the new German chancellor coming into office, setting a whole new kind of center of gravity for Europe, etc. So some tangible OPEC plus May 1st accelerates its increases. These are all fundamentals.
Absolutely. And I'll be honest, I suspect quite a lot of policymakers in Europe are going to do their best to plow ahead, despite what President Trump comes up with in the next couple of weeks, whilst at the same time trying to manage the fallout of all of this. And, to what Rad's been saying, we at Control Risks have been flagging, the whole new world that we're in since the height of the campaign with Trump. And people aren't ready, as we've been discussing throughout the last half hour. But what we think is that there are ultimately risks and opportunities, to Neil's point, in the coming months and years ahead. But it's being able to spot those and whether the market can, whether corporates can, whether oil and gas companies can, will remain to be seen.
I just wanted to pick up quickly with you, Neve, on again an event that is happening, or what did happen and will happen. We had the Saudi Minister of Defense go to Tehran yesterday, meet with the supreme ruler of Iran ahead of a second round of meetings between the U.S. and Iran expected next weekend, or I think this coming weekend, is it? But ultimately, Saudi getting directly engaged with Iran, its neighbors, on a common defense pact or something like that. Your thoughts on the role that this relationship, Saudi-Iran, plays in where all of this goes next?
The meeting itself is momentous, and that Saudi-Iran relationship is absolutely fundamental. There is a distinct possibility that despite, and it's been our kind of main call since really last year, that whatever President Trump tries to do, the Gulf region will act in its own interests. This is an explicit example of that, and something which certainly we think could be more powerful and more meaningful in securing regional kind of security and peace more broadly than ultimately whatever President Trump decides. So absolutely vital, and it'll be incredible to watch how it plays out.
Rad, last word to you, picking up on that point, where you see the next 2 weeks going and the meeting yesterday.
2 weeks is a very, very long time in our current world. I mean, it used to be that a week was a long time in politics.
Yeah.
Seen over the past that we've seen over the past 3 months is that, a day can be a long time. Look, I think there is a genuine effort on both sides to try and reach something. Neve made the point earlier that, it's when you get down into the devil's in the details. And I think, whether the competing timelines of how the Iranians seek to negotiate and whether the Trump administration has the patience to play with that. So I think for the moment, that the signs are positive. And again, this is a US president that has arguably gone against domestic lobbies and gone against Israel in terms of doing this. The New York Times article yesterday about debates within the administration and whether to green light an Israeli attack on Iranian nuclear facilities was a good example of that. So for the next 2 weeks, as long as the Donald wakes up and thinks that this is in his interest, then Steve Witkoff will have his marching orders and that will be done.
Just before on that point, and I'm glad you mentioned Witkoff, because I wanted just to follow up and ask you, Rad, just connecting the dots here in the sense of where does the Iran-US face-off, Israel, as you mentioned, sit within the wider dot connection, Russia-Ukraine, the same gentleman is apparently fronting that for the US, or China-US. I mean, all of these theaters are in active play at the moment. Is there a dot connecting? Is there a nexus between them?
Yes, it's that Donald Trump wants to reach deals with them. And Donald Trump has an agenda with them. I don't think it goes much beyond that. I mean, your point about Steve Witkoff is a very telling one. I mean, this isn't a man who's inside the system. This isn't a man with any great experience in terms of these issues. This is a man who is a real estate negotiator and one of Donald Trump's closest friends. He trusts him, and he's sent in to negotiate, often one-on-one, in terms of the sort of the counterparts for these issues. What's the common thread? It's Donald Trump.
Donald Trump.
I have one thought to leave us
Please.
with, which is on US-Iran for the next 2 weeks. Never underestimate the value and benefit of a shopping trip in Rome. So I think everyone will come out of this weekend feeling pretty good about themselves.
Shopping. I need one of those. I need one of
Don't we
those.
all?
Oil markets soared this week. Trump headline fatigue allowed traders to focus on fundamentals and make some money. That's what I heard from my trader friends this week. They made loads of money with a very easy trade, everything moving upwards. You don't need to be a PhD genius from Oxford to make some money in the oil markets this week. That was the quote I heard. Rad Al-Qadiri, thank you so much. We didn't even talk about beautiful Kurdistan. We will some other time. Niamh McBurney in Dubai, thank you. Neil Atkinson's in France. Have a great Easter weekend, or a weekend, Easter or not, and see you all soon again. Thank you so much. Bye-bye.
Thank you.
Hi, thank you so much.